BuzzFeed going public today on the NASDAQ through a business combination with 890 Fifth Avenue Partners. It's a SPAC, and the deal includes an acquisition of Complex Networks for $300 million. NBC Universal, an investor in BuzzFeed. Joining us right now, first on CNBC, is BuzzFeed founder and CEO Jonah Peretti. Jonah, it's great to see you. Congratulations on this milestone. So many questions about what you're going to do next, but also about the transaction itself. As you know, given the headlines around it, you're raising about $16 million in equity. On top of that, there's that convertible note, which brings you up over $100 million on top of that, or more than that, actually. But I'm curious, as you think about SPACs today and you think about this transaction, whether if you could do it all over again, you would still do it this way, which is to say, would you go off and do an M&A transaction or try to raise $16 million through the private markets?
Yeah, thanks for having me, Andrew. So I'm not, an expert on SPACs or invested in any particular vehicle. The thing that was so great about the SPAC transaction is it allowed us to go public and do an acquisition at the same time. And that's why the vehicle was really attractive to us. Digital media has really struggled to consolidate and get operating leverage because private-to-private transactions are really difficult. And so what the SPAC transaction let us do is add Complex, get public, have a public currency. And so we're very excited about the transaction and being able to become a public company today.
So now that you're a public company, tell us what therefore comes next.
We're going to continue to grow our business. We're going to continue to look for attractive acquisition targets with BuzzFeed, Complex, HuffPost, Tasty. We're bringing together the best brands in digital media, and we really are excited about being the pioneering company in digital media that will, be the comp for other players in the space and really show that digital media can be a strong business. And we reach so many millennial and Gen Z consumers that are just very hard to reach other ways. And it's, I think, a really exciting time where digital media is growing and becoming a really excellent business.
In terms of the path to profitability, the business still does lose money. What does it look like?
We were EBITDA profitable last year. We'll be EBITDA profitable this year, significantly more than last year. I think there's a great path for profitability in this space, and we've been able to achieve that. Looking at the kind of operating leverage you get also as companies get bigger, it's something that digital media has been lacking with a lot of smaller players. With more scale, you have the ability to invest in commerce, invest in advertising, invest in technology, and really build the platform, a modern platform for media.
Right. But speak then to the idea of investment. I think part of this whole transaction was around raising a ton of cash so that you could go make some of those investments, so you could hire personnel and such. And clearly, the amount of money you were able to raise in the end was not what I think people imagined when you began.
We raised enough cash to operate our business and acquire Complex. We'll have a public currency in a public stock. And operating with fiscal discipline is really important. Having a lot of cash would be nice. But it's important to use your cash in a way that where you really are understanding the inputs and outputs of your business and right. Investing wisely. And we've been able to do that, and being able to have a business that generates cash is more important than just raising a ton of cash.
But Jonah, we've known each other for quite some time. What did you think when you saw the redemptions? You had to think something.
We entered a SPAC market that was very hot, where even companies that were not very good companies were raising at very high valuations and raising a lot of cash. We have just this year, not 3-4 years out, we have over $500 million in revenue. So we're a real business that could have taken a traditional IPO path. In the midst of our process, we definitely saw the SPAC market get ice cold, and so we anticipated high redemptions, and we structured a deal so that we knew we could get public and buy Complex regardless of the redemption levels. So we really anticipated this because we saw what was happening in the market, and feel really excited about Complex joining us and being public today.